All right, hey there guys, Sam here from TradeDevils.com and TradeDevils-indicators.com. Okay, well today, I guess in coordination with the Halloween holiday promotion that we're running through the weekend, I thought we'd send out another video here. Now that we have the Discord, for those of you that are either in a trial of any of our indicators or owners of our indicators, we get a lot more direct feedback. And it's helpful to us because it gives us some guidance on those areas where we could indeed provide more help, guidance, or at least based on our experience, how we use these tools. So today, again, this is very much based on feedback we're getting from members, customers, users. Well, I thought we'd revisit the footprint charts. Now, some people love them, hate them. It's not a requirement, but you'd be hard-pressed to find disadvantage to using it. I mean, there's really no way to look at this other than to get additional insight into the candles that we're trading. So, again, it's not a panacea, but there's certainly benefits to having a footprint chart that can really guide you. And if you just don't like to look at a chart this way, for whatever reason, I wanted to demonstrate today in this video how we've created some tools to get as close as we possibly can to giving you the insights that you receive from looking at a footprint chart, and do it just on a traditional candlestick chart. So that's the goal here. I hope to make this on the briefer side. I have a tendency to be a bit talkative on these, so I'm going to try and just stay focused on what's meaningful, what's usable information, and kind of keep it at that. Okay, so I've done here now. I'm recording this on Thursday, the 27th, and I'm disconnected from data. I just find it too distracting if I'm connected to data and I'm doing this while the markets are open. There's too much. Alerts will be going off, alarm fire. It's just too distracting. So I hit my goal for the day. So I just disconnected and thought I would focus on trying to get this video out to you all. Okay, so I'm just going to go back here to the open here. So I've got I should note here. I've got our footprint indicator on. And then I've got our initial balance, right? That's the only things. Those are the only things that I have on the chart at the moment, right? So I'm just going back to, this is Thursday's open. I'm using a 4,500 tick chart here on the micro ES, right? So I'm going to stay focused on the micros. I've mentioned this a number of times, but my view, and I would guess this would be the case for the majority of our customers, any account less than 20,000. My strong recommendation for you is to work with the micros. If you're new to trading, prove you can be profitable for 90 days trading micros before you go to full size. And if you're trading with what's common account size, I was a broker for 10 years. Trust me, I know common account sizes. So it's very common for people to open an account with $10,000 and they plow right into S&P day trading, and they're trading the ES or the NQ, and they're undercapitalized, right? It's just the margin for error is so small, the volatility is so high. That's a very good way to turn a $10,000 account into a $5,000 account. So, not to get into a whole thing on money management, but I just strongly recommend, if you are 1 penny below 20K, stick with micros. The whole experience, I think you'll enjoy it much more. Okay, that said, let's get to the footprint chart. Now, we do have a video here when we first introduced the footprint chart that goes through kind of the basics of this. So rather than go through all of it again, that's on our website for you to review. I'm talking a little bit more about applications for the trader. Now, see, what happens when people first look at a footprint chart, and it wouldn't matter what the market is. Here we're looking at micros in the ES. It doesn't matter. What we're not really worried about. And well, let me say that. For me, in my experience, doing this for again almost 30 years, I am not trying to let's get a arrow here. Like, I'm not trying to get here. I guess it won't let me do that. Maybe this will do it. Okay, I'm not looking at that going, okay, what is going on at this tick, right? What is the relationship between the bid and the ask at that particular tick? And then I can look in here and say, oh, it's 105 to 118. Oh, so market's going down. That's not what again, I got to be trying to say this the right way. I think you'll find that if you're trying to be that granular with, well, okay, well, what's happening at this tick, one, you're going to drive yourself crazy. Two, it's kind of a waste of energy. The benefits of the footprint chart are not so much what's happening at the tick level. It's looking at to some degree at the larger interpretation of what we can see by looking inside the candle. So for example, again, I'm not going to go into each component that you look here, but on the as we look below here, there is some redundancy between what's above the candles and what's below. So you don't always have to look down. I always kind of found that annoying, that oh, wait a minute, I got to what candle, how do I go down, where am I? I think there's great benefit here in just looking at the delta read on top of the bars, right? Now, of course, it's reflected below, right? So this delta is going to be this delta. But it gives us some insight in here into the, if nothing else, the bias of the market. So here's the open right here. So as we open, one of the first things that we see right here, and I guess I'm going to have to bounce around a little bit, is that we have an imbalance here. And this is one of the really huge benefits of looking at a footprint chart, is that I can see where we have aggression. We're in this case, it's sellers are aggressive here. So I have a stacked imbalance. So if you look at this, and again, I'm going to find myself going over the content, but just for those of you that may not be familiar, you'll look here now. So look at these three candles right here. They have no outline on them because there are no stacked imbalances in here. We have a little bit of an imbalance here, a little bit, but we don't have multiple imbalances. Whenever we have a frame around the candle, and you can set this to your liking. This is how I prefer to do it. Whenever I have a frame around a candle, I know I have multiple imbalances. So here I go red, here's no frame around the candle, here's a green frame, right? So I've got positive delta, I've got imbalances, no, right? Here's a big one. So it allows you to kind of focus in on more significant candles. But as we're in this position right here, one of the first things we can see right off the bat. Now, let's assume, for the sake of this conversation here, that this is not the open, because most people are not going to trade within the first minute or two of the open, right? And here, we're not even 4 minutes in right here. But that aside, let's just focus on what we can see here. As we were going into the open, the market's rallying. Right now, we get up here, we get a pivot here, and I get a negative delta. We start to come down. Now, I would note here, I'm leaving unfinished auctions here. Whenever you see that little dash dot line here, that means we've got we don't have a zero at the bottom, right? So do you see here? I've got a zero here at the bottom here. Here I have an unfinished auction. So it's very, very high probability that the market will come back to finish the auction there. So you'll note wherever we don't have that little dotted line, there'll be a zero on either the bid or the ask side. Where I do have it, it means unfinished business right there, right? So, and you'll see here's an unfinished auction on this up candle, comes back, the market resolves that unfinished business here, and you'll see this is very consistent throughout the course of the day. Now, back to the point here. So as we're coming up here, well, here we get an unfinished auction up here, and we have one up above it here as well. And then the market starts to come down going into the open. Well, right here, I have aggressive selling. Right, in this candle. Well, one, we see multiple imbalances, thus the red outline. Here's my POC. I've highlighted the POC so we can keep an eye on which way it's going. And then here at the bottom, I've got very aggressive selling. Now remember, within the candlestick, all we can see are the active sellers. We can't see we can't distinguish between limit orders and market orders. I mean that's just inherent with a footprint chart. The size, it can stand out. There are ways that we can, through some deductive reasoning, identify if there's a particularly large order that may very well be a limit order. But for the most part, what we're looking for are the aggressive traders, right? Who's aggressive, right? Now, when we see that, and this is not an ideal location because of the open, but the point is the same. What I can see here is that I've got traders here that have committed through market orders that they're aggressively looking to get short. So what happens here when we start to rally is that these guys have to cover. Right, they're off sides. They went for it for whatever reason. Right, they're going for it right into the open. They're anticipating we're gonna have a big drop off. Well, as soon as they start to get pressure here, they have to cover. Right, so I mean, it's not massive amount of size. Right, again, these are the micros, but it's enough to where what do you got there? 30 lot, 17 lot, a 55 lot, a 32 lot. I mean, this is some size coming. I mean, for micros, right? It's enough here to where, look, all of a sudden, they got a cover, right? They're offsides, out of balance, right? So that's one quick advantage we can see here, that if you get to a pivot or an area of interest, let's call it that, might be a fib retracement, might be market structure, might be just support and resistance. When you get to one of these levels and you're looking to try and identify if not there's an opportunity there, what you want to look for are traders that would be off sides like this, because if the market starts to push away from them, they're going to have to cover. That's fuel, right? To drive the price higher. Now we get up here and you'll see, and this is really, really common. It's just something that you want to keep an eye on. Note as we get up here, right? So this is the opening range high. So that's the high of the first 30 minutes. Look at the delta on these bars, right? All of a sudden it's red, 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 red. Oh, we got a little bit of a pop here as bulls try and get some sort of a rally going here, but it fails. And you'll note here, we can look inside the candles. This is again, just additional insight. Now you can see this on a candlestick chart, of course, right? We can see the wick rejection here, but there's additional insight here, and the benefit of seeing that bar by bar delta, it kind of gives me an idea of who's in charge here. So we've had this little push up here, and then all of a sudden there's no follow through. We can't even get up to clean up this unfinished auction business up here. So all of a sudden it's negative, negative, negative. Now look at the absorption here. So even though the market pushes up here, and there's an effort to try and perhaps go up and clean up some of those unfinished auctions, the market comes back down, right? So we get a negative delta here. Now here it's a little bit of an effort, but look as we go up, rejected, right? So all of the buys here are being absorbed by the sellers, and then eventually we roll over. So look at the POC within the bar here. So here's a little bit of we stall here. Maybe I'll do it this way. So we've got this little section right here where, okay, we're going sideways. Here oh God, that's the open right here. So we're stalling at the open. Okay, now here's the break. Okay, now I've got lower POCs. Here's a little bit of a kickback. Now all of a sudden some buying coming back in here, but really, you could just, if I do it like this, right? What do we see happening here, right? So it's just from the pivot high, we're back to a 50. So if, is it going to let me do that? Right. So if we look right here, here's that zone that we're always looking for potential algorithmic participation, right? I've got a swing to a low. I've retraced. I'm between the 50 and the golden zone. Okay, what's happening here? Well, here's the push that drove it up to get here. So at least I'm in the retracement zone. Now, when I get here, what happens, right? Are we pushing up? Is there more positive delta? Are just looking at the candle, am I closing on the highs? Where are the POCs? Right? So I've got 3 candles here with positive delta. You can see it down below. Oh, okay. Well, a pretty good push here. And as we get there, here's the POC of this candle. If buyers are going to continue to push this higher, again, look at all the unfinished auction we have up here. There's incentive for them to get up here, right? There's unfinished business there. They can't do it, right? So as we come here now, big down candle. Again, you can look in the candle. So we come back. Are we going to try and reclaim this? We come all the way back, one tick beyond the POC, and it's absorbed, rejected again, and then I get stacked imbalances again. Now, here's the target. So this is just a measured move. Or if I just draw it, right? This is nothing more than, right, what I've taught this for many years now, right? Again, just a measured move, right? This is the DNA of the market. So here's where the algorithm participates. Here's the target. We get a little bit of a pop there, but market has additional intentions. First target, second target, makes it all the way here. With this is not the initial balance yet because it's not 1030, but this is the low. It ends up being the initial balance. But as I come down here and I put in this low, well, okay, well, it's negative delta, negative, one little pause here, and then all the way back down, and I tick what ends up being the IB low. Now, upon ticking that low, look where the POC is. Then all of a sudden, boom, big up candle, and note the frame around the outside. So I've got imbalances within that candle. So what happens here, again, we'll look at this on a candlestick chart where you're just more used to seeing it. We come up, now we come down. Now what do I got here, right? I got a higher low. Oh, now I got a higher high. Right, so the makings of a bottom here, which potentially could be a swing that would be attractive, are in place. Oh, okay, lower low, lower low, lower low. Oh, it's all negative delta. Oh, all of a sudden, wait a second. Here we see 918, right? That's the delta on this, and I can look at max min delta. So again, because we have the other video here, I won't go through everything here, but look at the difference between the max and the minimum delta here, right? This is a big, hey, heads up. Right, perhaps this initial drive down is running out of steam here. Now we see as we hit the low, we got a little wick rejection here. We go from a negative 622 delta to a positive 918. Now, right, so here, would you know, right? You wouldn't. Oh, let's get that off of there. Certainly get off of there. One possibility here is that this is just going to, we're going to have a little retrace, and then we're going to go down, right? So of course bears would be looking to do that, but what happens here, right? They can't. There's nothing. They can't do it, right? So here we get, and you've got a little delta divergence there. So now we start to push up. Now look, as we start to push up. Now you don't have to get the tick low here, particularly since we're trading micros. You don't have to be as precise. So if you think, oh hey, I've got a higher low, and we'll look at some other tools that we'll introduce here to give you some insight into that. Oh, looks like, hey, perhaps I've got that first higher low. Now look at the delta, right? Oh, buyers are fully in control. What are we doing? We're going back to this. What this ends up being the pre-market mid. Oh, okay, right. So that's a pretty good push. Now look at the POCs. All of a sudden, a little retrace down here. Look here, I'm leaving unfinished business here. Little retrace. Oh, where are we going? Are we going back down? Nope. Right, completely reject. So there's a storyline. Now I know this is more difficult when you're in the heat of the moment. One benefit of switching to something like a 4500 tick, it's going to slow it down. As if you're looking at a 1 minute, or some people will even go below that. Look at a 30-second. What's going to happen is you're going to end up trying to glean the information from, oh, let's see, at 38.48 and a quarter there was a slight imbalance. That's a fool's errand, right? Well, I mean, I shouldn't say it that way. In my experience, that's not the best way to use it, right? What we want to see are what stands out on the chart. Okay, so number one, we can see the delta above the bars as well as below. And just visually, we can kind of get some sense of who's in charge here. But more than anything, what I really am looking for are where are the imbalances, where are traders aggressive, and where do I see these stacked imbalances? Because these are potential, right? It's either potential for the market to come back as support, but if it breaks, then those traders have got to cover because they went heavy there. Right, and you have a group of them. That could be just one order that's being filled, right? We don't know. We can just see that a lot of size was in here on the buy side. Now, as we're going up here, now, okay, wait a minute. Wait, now look at the size of the bars, right? The contraction. So at 4,500 ticks, we get a difference here between the range of the bar, right? Because the volume is going to stay relatively consistent because it's a 4,500 tick chart, right, or bar. So you're going to see some variance, which is why I still keep the volume on. So we see here's 93.20 in volume on this up candle, but most of them are in that mid 8 range. So here's 8 here as we go throughout the course of the day. You'll see some variations in that. But if I'm looking down here and I see, oh, okay, it's just all mid 8s. Here's a little 9, mid 8s, right? That's a function of the fact that it's a tick chart, right? So the 4,500 ticks is going to keep that volume relatively consistent. So if I see a 6, a 7, a 10, or 11, those really stand out because I know that's a very high volume bar. Oh, I think we did get some later in the day. But what I'm really looking for are these levels where I see imbalance and aggression, right? So here, let's see. Here's a decent example. So here's the stacked imbalance. So number one, I can, with the outline here and a positive delta, I can see the market is pushing up. Now here, look what we get right here. All right, so this is the first test of the initial balance high. Now this is a trade. I don't know anyone who else teaches this trade, which shocks me because this is consistently day after day after day the easiest money on the board. I'm astonished that people don't know this trade or don't take this trade. I have trouble getting my members to take this trade. This is if you take any week of the last 5 years, load up some data. If you got some historical data, go back and look at what happens on the first test of the initial bounce. There's an algorithm that sits there that fades it every single day. Now, that doesn't mean that this is going to be a winner every single day, because obviously there are days when the buying pressure, the bulls are more in charge, or bears, there's news, whatever it may be. There are certainly days where you're going to get stopped out here. But if you do this consistently, you could literally specialize in nothing but the first test of the IB high in all the 4 indexes, crude, gold. It's absolutely astonishing how consistent it is. Again, not every day, not every market, not 5 days a week, but very high probability. So you look at this and you say, well, wait a minute. It didn't turn exactly at the IB. No, it didn't. It went 13 ticks beyond the IB. Right? But if you're aware of this trade, you're looking for it. So when it first hits, here's 1031. Look at the delta in that bar. Big up bar. Big delta. Look at that. Look here. 173, 420, 565, 425, 617, 1436. This is a big push to try and break the IB. Every day, it's what the IB is always where the battle happens, because that determines whether it's trend or range, right? So bulls will always be pushing to get it outside of the initial balance. Bears will always be pushing. Well, I should say initial balance high. Bears will always be fighting to push it outside of the initial balance low. This is day after day. It never changes. Never. Okay, so when we first come up to the IB high here, because we're alerted to this trade, we're looking for signs of weakness. We're looking for that algorithm to fire. Now, ideally, this is not as well suited, this particular trade here. I'm digressing already. This trade is not particularly well suited to micros because it tends to be more of a scalper's trade. So this is a trade that is well suited to full-size contracts if you're comfortable scalping and you have the discipline to maintain money management there. But here we're just looking, this is micros. So we're back under the IB. All right. There's 83 ticks. Right? As far as I know, it doesn't get tested again until later in the day. I mean, that's a pretty good move. We're heading right back to well, here's the pre-market mid, here's the IB mid. First test of the IB high. All right. If you didn't know about it, well, you do now. Look for it every single day. I promise you'll thank me. Okay, so now, if you were unsure, like, oh, do I get out? Oh, shit, I don't know. I got 25 ticks. Should I get out? Delta, delta, delta. Now look what's happening here, right? Big stacked imbalance, right? So they're getting aggressive. Now, of course, see, when we talk about this is potential. Now, if we start to rally here, these guys have to cover. Right, so you're getting insight into where, oh, hey, those guys are off sides, they got to cover. Otherwise, if we come back to it, what would you anticipate is going to happen here, right? They're going to defend that. Right, this is where the resistance is because of the aggression of these sellers. Right, now we get down here, so all of a sudden, it's kind of the same thing happened. Now look what we're coming back to, right? We're coming back to this range here. So we always want to look left into that context. Well, hey, I had a POC here. I had some aggressive selling here. I know I have stacked imbalances here. Oh, I'm going to come back here. Look what I get right here. Oh, right? There's no zero, unfinished business. So while this is a little bit of a push here, you can see the sellers here are starting to get absorbed as we push it. Look at the delta change. Look at we went from 1400 up here. Now we come down here. Now it's 19,400 minus, or pardon me, 418, 19,739, 1100. This is another big push to rally. Look, you'll note here we go to a darker green. The delta has gone up dramatically. Where if we're going to rally, what's going on? Why aren't we why aren't we going higher, right? Big push here. Here, I got imbalances here. They're not, there's only 2, not 3. I need 3 for an outline. They're not stacked, so I don't have a bar to show me that they're stacked. Whoa, wait, why aren't we going higher? Negative 602, negative 106, negative, look at the dark red, negative 2200. Boom, drop the hammer right there. Down they go. What get at the bottom of the bar? Right now, here's a good example. Bottom of the bar. Boy, they're going for it here. Going for it, going for it. Wait a minute. You're going to leave me hanging down here? I got unfinished business here I can't quite get to? Well, they clean it up right here. Note there's a 0 here. So this is unfinished business from a bar all the way to the left. All right, so we get down here. We actually clean it up here. And then we look what comes off of that. Okay, so now what you can see here is what we had aggressive sellers here. Now, oh, they're nervous right now. Now again, this is because it's micro. Let's stay focused thematically, right? Just not think about the dollars and cents. Let's think about the ticks. Or if it were full size, if we're going from 38.44 to 38.48, 49, okay, there's a little bit of a clench right there. Oh, wait a second. Well, am I wrong here? Oh, we're going to come down here. Oh, better. Wait a minute. Note, it's all getting absorbed, right? So all of this here is getting absorbed. So while there's an effort to take it back down, absorb. Look at the POCs. Oh, kind of down here on the end. All of a sudden, they're climbing. Okay, I'm back up here. Where am I? I'm at the opening range. I'm at the open. Right, one more push up here. Either it's unfinished business, can't get it. I got positive delta. Oh, down we come. So you had a potential squeeze. It's very possible the sellers here got squeezed out here. Now we come back down. Same thing here. Right, note the outside of the candle is highlighted, meaning I've got aggressive sellers. Look at the delta. I go from a positive delta here. We got imbalances here and a fairly high delta, right? The darker green here, 894. Then I go 367. Wait a minute. Here's 1300 negative delta. Here's 31. Oh, not so much here. A little bit of absorption here. So this is typical. Okay. Oh, at the bottom of the candle here, somebody went for it. Oops. Ooh. Right, again, micros, maybe you're not sweating. Full size, yeah, that's, what are we talking about here? That's 38 ticks. If you're in a 2 or a 3 lot in full size, you're likely not still holding. So essentially here, what's happening? Now we get kind of a visual, what are we doing? We're not doing anything. Right, there's no sense of trend here. This is just standard rotation. This is just nobody makes money here but the machines. So now what we want to look for is, okay, if we start to break out of here, are we doing it with any aggression? Well, here, perhaps we're starting here. Now, when we get to incorporating a few other components here, and we're looking at a candlestick chart in addition to this, there'll be some additional value here. But as we see, okay, we're coming down, stacked imbalances. Okay, so when these guys are faced with this right here, what do they have to do? Right? Likely, they're going to have to cover. So it's showing us where were they aggressive, where are they offsides. Right, for lack of a better term, right? Where are they going to get uncomfortable? And trust me, the larger players in the market know that, right? If you and I can see it, trust me, they can see it. So as we push up here, they're a little nervous. They're off sides. I've got aggressive buying up here. Oh, why no follow through? Right? Watch the delta. Watch the delta. Are we coming down? Oh, now look what we have here. Let's go here. Okay, so right here, it's 1223. Pardon me, 1229. That is the first test of the IB low. All right, first test of the IB low. Now you're looking at it. Now you know this is a trade to be looking for. Again, it's not going to hit every day. It's not going to turn here every day. But if you're looking for it, you'll be in a position to take advantage of it when you see it start to move. Okay, so we see aggression coming down into the IB, right? That's very, very typical because bears are going to try and push it out and hold it outside of the IB, right? That brings in the higher time frame traders. Oh, maybe we've got a trending day and not just a range day contained by the initial balance. So here's the push. Right, so we do break. We get outside by 17 ticks. Right, we're out by 17. Oh, we're gonna keep going. Oh, we're back inside. Now look on the buy side here. So all of a sudden I've got imbalances on the buy side. Delta 424. If we were going to just keep free falling, you'd anticipate that delta to stay negative. Look at how dark red we are here. This is 1940 as we hit the IB low. They were going for it. We are not the only people who know this trade, and certainly there are many that will be pushing to try and break the IB. So whenever the intention is to break it, particularly on the full size, you'll see huge size come because they know they have to fight through the algorithm that's there. So you will see big pushes here, very high delta. Whether it was up the IB high or the low, just be the same difference. You're going to see, in this case, you're going to see very big negative deltas and huge stacked imbalances as they push to break that algorithm. Well, what happens? Oh, we're back inside. Again, this is just micros. We went back to the IB mid. There's 83 ticks. Up. Oh, a little bit here. What? Oh, I don't know. That's kind of directionless, right? Absorption on both sides. On both sides of the market. Oh, what are we doing here? What are we doing? Oh, there's the big acceleration. Why don't we keep going? Right? I mean, at 4,500 tick, you've got a little time to watch what's happening here. Where are we on the chart? Now, of course, one of the things with a footprint chart, I mean, this is, what have I got here? I've got I've got 6 24-inch 4K monitors, and even then, while I can see a good chunk of it, I can't see the entire day. Thus, the benefit of using a footprint chart in conjunction with a candlestick chart. So hopefully, you'd have the real estate, either you're doing it, if you were on a laptop, you could do it through 2 different charts or 2 different tabs. If you have the capacity to do so, perhaps you've got multiple monitors. Not everybody will, and you don't necessarily need multiple monitors. It's ultimately a function of how many markets you're trying to trade. But if you were just focused on the S&P or the ES or the MES, you could probably do it just fine with 2 charts, maybe 3. You'd want to have something higher time frame, maybe a 15-minute, a candlestick, and then maybe a tick or a minute chart, whatever your preference is. So it can be done. I mean, I have 6 monitors because because of my position here, and I have so many traders trading multiple markets, so I've got to watch multiple markets. I don't necessarily trade all of them, but I'm always going to keep an eye on the S&P and the NQ. For what that's worth. Okay, so here I hopefully you see a little bit of context here. Now, as we make this retracement here, let me we'll have to go to when I go to a candlestick chart. So here we made this big push back up here. We got to the IB mid, the pre-market mid. We leave note here, unfinished business up here. So this whole section right here is like, hey, wait, what's going on here? We just tapped the IB. We've made this nice retracement back here. Now what are we doing? What's happening here? We're going to keep rallying. Well, that would be, I mean, that's a pretty good push, right? What did I say? Almost 100 ticks. We've gone up here. Are we going to sustain this? Are we going to start to roll over? Well, right. Look what happens here. So first, you've got sellers that went for it here. So you can really see what was happening here. They're trying to send it back down. Right, this is a huge, massive stacked imbalance here. They're trying to send it down. Right, they run into these guys. Right, they run into them. Oh. Now, are you staying? Micros, probably. Full size, definitely not. Okay, what are we doing now? Look at the POC up here. Right, but there's no stacked imbalances here. I've got fairly juicy delta over 1,000 here, from 898 to 1,012. Why can't we keep going? Right. Down we come. Boy, these guys. That's what do we got there? That's probably not too much. 20, well, it depends on the size, right? That's 25 ticks. Full size, you're probably out, right? Micros, maybe not. Maybe you give this a chance to see, what's happening here. I'd be concerned right there with a POC up here and a delta of 1,012. But it'd be a function of where are we in the, we'll look at that in a second. That's at 1323. We'll remember that spot. If we start to come back down, now remember, these are the stacked imbalances from this was, the effort was here to try and send it down, right? They had to sit through and sweat that before we come back down. Now it happens again, right? It literally picks up right where they left off. Now we're still trying to go sideways, right? Some pushes here. Look at the absorption here, right? So you see here we've got a positive delta of 139. So the market went up. They tried to rally here because what were bulls thinking? Bulls are thinking up, down, right? We're going to just do a measured move like that. That's what they're trying. That's what's happening right here. You can literally see it happening. You can kind of put the story together in your mind because it's revealed to you. Oh shit. Okay, we're retracing here. Let's see if we can get a rally here. We're going to push. Right? So, and what would the advantage be? If they could get it up here and challenge these guys, then they're offsides. They have to cover. Right? That's the benefit, right? Seeing where are they trapped. Right? It's another way to look at it. Where are the trap traders, right? That are going to have to cover, that would be fuel to cause that market to continue to rally. Or if you were scalping, right? I mean, scalpers, some go for 2-3 ticks, right? But you're doing that in a 10 lot. Again, right? That's why. I mean, scalpers are almost always going to have an inverse risk reward, right? They might go for 3, 4, 5, but they'll have a stop of 8, 9, 10, 12, right? It's almost always inverse. So that's why you've got to be so good. So that's why a scalper would really benefit from a footprint chart because I can see where they're trapped, where they got to cover. So if I'm only after 4 or 5 ticks, well, that's a perfect spot for it. But they don't get challenged here. It just keeps rolling over, right? So this is can we do it? Guess not. Guess not. Now look at the POCs. Down, 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 down. Oh, and here I get to 217 before I when I started the video here, and I just disconnected from data. Get off of there. Okay, so that's not what I want. I want you back here. Okay. All right, let me pause the video here. I'm going to bring up another chart. God, this was going to be short. So much for that. Okay, I'll be back in 1 sec.